Hi everyone, today let's take a quick look at retail sales. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So retail sales did very well, and it did give a bit of a shot in the arm to markets early in the session, but of course we could not hold those gains and markets ended up tanking throughout pretty much the rest of the session, and we'll look at that later on the charts. But you can see retail sales increased 0.7 for the month, considerably faster than the forecast of 0.3, but it is worth noting that it was a slight decline from the revised numbers for February, which ended up at a 0.9. So still a slight decline from the revised numbers, but way better than we thought we were going to get. And then you can see some of the sectors that did very well. Auto-related sales jumped 1.1% above the 0.5 expected. Gas prices went up a lot. A little bit of that is seasonality and then geopolitical risk. But not everything was amazing. You can see sporting goods, hobbies, musical instruments did decline by 1.8, and clothes were down 1.6, and then electronics and appliances saw a 1.2% decline. Moving over to fear and greed, you can see we dipped all the way down to a 41 from a 46. We're now into fear. We have not seen fear for a long time. Last time we were at these levels all the way back here on November 13th on this upswing, and the last time we were dipping this low was all the way back in August of 23. So it's been a long cycle. We are headed lower. You can see most of the major indicators have dipped into neutral. Breadth still hanging in there a little bit. Put call ratio, fear, volatility, extreme fear. This says we topped out around 19. I think it's probably higher than that on the VIX chart. We'll look at that later. Safe haven demand hovering in extreme fear. And then junk bond demand hanging in there at extreme greed. Moving over to seasonality, you can see the low of the month was supposed to be on that Friday session. We ended up getting a much lower low here on the 15th. We'll see if we get a rally into the rest of the month, but markets look terrible and we're probably headed lower. Moving over to the earnings calendar, we did get Goldman Sachs. They did quite well, beating pretty heavily on the top line and bottom lines. And then looking at tomorrow, you have United Health, J&J, Bank of America, Morgan Stanley, and then going into that Wednesday here, you can see Abbott Labs pre-market, US Bank Corp, always interesting, and Crown Castle. Moving over to the economic calendar, you can see retail sales, much better than expected. That previous number was revised up from 0.6. So from the 0.6 to 0.7, that was better, 0.4 expectation. So everything was still good here for retail sales. And then you can see core retail sales 1.1 versus 0.5. So the US consumer still very strong. And then looking at tomorrow, pretty much nothing on the calendar except for potentially Fed Powell speaking here at 13:15. I say potentially because these calendars can be hit and miss sometimes. We'll see if he says anything about interest rates, if he ends up actually saying something. And then looking at Wednesday, all you have here is CPI for the Eurozone, and then you have crude inventories for the US. That might be a little bit more interesting with all of the geopolitical stuff, but otherwise not much. Moving over to Max Payne. Max Payne actually moved down here to 508, stock price at 504. Remember, this is a third week options expiration, so there's lots of puts in the market. 500 critical level, 510 also a pretty big put wall, but we're already down below that. So 500, we'll see if that breaks. If it does, that's going to be massive. Honestly, I thought 510 was going to hang in there a little bit better, and then markets really pushed lower here today. Put call ratio still very high at a 3. We'll see if we get the bounce into the Friday session. Of course, remember this is Max Payne for the end of the Friday session, so you could still get a bounce above 510, which would give you about 1% upside from here. And it really does make sense to get a finish between 510 and that 530 area. Pretty wide range, but 510 to 515 would make sense. But right now, technicals look very bearish. Moving over to the charts, starting off with the S&Ps here, you can see this was a dumpster fire of a day. We ended up down 1.25%. Structurally, this is all the way broken here. We're well below the 55 EMA here on the daily chart. Fell throughout the session, more selling after hours, massive volume. Everything looks terrible. Next level is 500. We talked about that being a critical level. There's some trend support just below that at 439. And then you got the 144 and the 200 all the way down here at 472 and 465. So long way down to those levels. You could potentially find some support before there, but really that makes the most sense to me. You can see volume profile does make sense right in that same zone to find some support. Moving over to the Tasty charts here for a moment, you can see we hit that lower ATR band that's currently at 504.80, and we are below that here on the hourly chart. Sometimes that means you get a little bit of a sideways chop. Could still mean lower lows to come, right? So sideways chop, pull back in time, and then lower lows. Certainly possible. And then you can see on the 4-hour chart, same thesis, lower ATR band, 504.50. Still in bearish conditions, and you can see those ATR stops rolling down. So ATR stop right now, 516.47, and then getting pretty close to that lower ATR band here on the daily chart already, 501.30. And then you can see those ATR stops. We had one here on the Friday session, and then we continued lower on the Monday session. We're also below that 55 EMA here at 506.10. And then next level of support would be the 89 EMA at 495.53. Moving over to the NASDAQ, similar thesis, tried to rally on those retail sales, hit the 200, sold off massive. Huge legs down, 1.65% to the downside, massive volume, continued after hours. Support right now, 428.50, but realistically, similarly to the SPY here, there's a lot of levels. And the 144 EMA is all the way down at 403.78, so that would be another $27 or so of downside potential. And there's plenty of room here on the RSI to get into oversold conditions. We're only sitting at a 41, so that would give you a lot of room to the downside, and this looks very bearish at this point. Moving over to the Tasty charts, you can see on that retail sales data, we actually did take out the ATRs, and then we came back and hit that to the downside at 438.50, and then once that broke down, it was straight down, way below that lower ATR here. You can see we took out all these levels as well, where we previously found some support. 4-hour ATR sitting at 430.16. You can see that's where we did find a little bit of support coming in. Not a whole lot, still a ton of selling, still bearish conditions, but definitely did find a little bit of a bounce. Might see a pullback in time, but you would expect this to go lower. And then looking at the ATR stops here on the daily, surprisingly, this is still intact here at 429.98. Didn't quite get there. We're almost there after hours. Finished at 431.06. Markets are down a little bit after that. This level probably going to get taken out tomorrow. And then you got the 89 EMA at 424.23, right at that lower ATR band, 422.75. Moving over to the Russell and the Dow, similar thesis to everything else. Big selling, 1.46 and 0.67. The Dow had been selling off pretty aggressively already, so it makes sense that it didn't fall as much today. Russell hit the level, 195.15, bounced a little bit from that level. It's up a little bit after hours, but at this point, this looks super bearish. I wouldn't say anything's going to happen. 191.89 is support, and then you have the 200 SMA sitting at 189.46, which makes a lot more sense to me, right in that 189 area. Momentum and RSI bearish. Similarly on the Dow. Next level, 376.35, which is about $1 lower from current prices. You also have a highly traded zone just below that, right in that 375 area. Momentum and RSI still bearish here as well. Moving over to the Mag 7, here you can see we dipped all the way to support. Support level 349.21. After hours, we are below it, which is not great. You got the 55 EMA there at 431.25. Probably going to touch that at some point, probably within the next few days here. Momentum and RSI definitely bearish. Volume ramping on that down move. Overall 2.41% to the downside, and it looks weak going into the close. Moving over to Apple and Tesla, you can see Apple was down 2.19, gave back all of the gains on Friday, and then some, almost back to that 21 EMA, which certainly could hold. 171.77, interesting level. Also have the 170.90 level, that would be just below that 21 EMA, VWAP in there as well. Does kind of seem like we might find a little bit of support on Apple. Seems like a better place to be than the broader markets right now. It was still down more than the NASDAQ, but it does have a better structure. And then looking at Tesla, we talked about their potential job cuts. In a short this morning, definitely check that out. Seems like they're cutting about 10% of their workforce. They were down massive, 5.59%. RSI breaking down, momentum breaking down. Next level of support, 152.43. It hasn't broken all the way yet. You can see we're right at these wicks, but it is falling more after hours, and I would expect this to go lower into that 152 area. Moving over to Amazon and NVDA, these have been my bellwethers here recently. These have been the stocks that have been holding up or going higher. Amazon touched that level again, 188.61, and then we sold off. We're below the 9 EMA. Next level, 181.41. So big selling on the day, 1.35. Still a little better than the broader markets. And then looking at NVIDIA, big selling there, retested that 21, selling off. Support 483.36, but momentum and RSI bearish, and you can see classic step down on RSI, hit the SMA, broke right back down from that level. So it does seem like this is set to go lower. 55 EMA there at 809.94. Moving over to staples and discretionaries, massive selling across the board. Staples came in a little bit better, 0.41 to the downside, momentum and RSI bearish, but it had already been falling pretty aggressively. We're almost to oversold conditions at a 32 RSI, and then that next level, 72.50, 200 SMA, 72.26. At this point, you would expect it to overthrow the 72.50 level, start to get into these zones, and then we'll see what happens. And then you got discretionaries falling off a cliff, 1.67 to the downside. Tesla probably dragging that down, and you can see it's down even more after hours. Support level, probably 170.68 is your next potential for support. Overthrow these EMAs and SMAs, touch that trend. Then we'll see what happens from there. Moving over to transports and gold, you can see transports down 0.89. This continues to go lower. This is a new lower low based on this previous moves. Next level of support still that 66.63 area. We didn't quite get there, but it seems like we're headed in that direction. It's flat after hours. And then you can see gold rallying higher 1.87% on the back of that geopolitical. Still riding this trend line, touched the 9 EMA early in the session and then rallied. Probably going to push back to that 225 area. Moving over to breadth, as you would suspect, breadth continues to crater here. We did continue to push down. We didn't hit that 7.75 level, so this could absolutely go lower. We took out these lows here going back to August and the end of October. So at this point, it seems like 7.75, potentially down into this 4.5 area. Either way, it seems like there's a little bit more lows to go. Similarly here on the 50-day breadth, broke that 40 level, closed below at 35.18 right now. Looking at 32.22 for the next level, maybe even a little bit lower around that 30 area, right back into this zone. We are oversold on both of these already, so that's interesting. Doesn't mean we can't go lower. You can see down here, got into very oversold, bounced slightly, and then ended up going much, much lower, despite having better RSI reads. So certainly could go lower, absolutely. Anything can always go lower, but it is something to pay attention to in the short term. Moving over to the 2-year and the 10-year yield. Yields didn't really go too much higher on the day. 10-year recovered its losses from the Friday session, got back above that 4.55 level. Does seem like it could be set to go higher, but the 2-year didn't make up all of those gains. It was positive on the day, 0.49, got back into that 5 area, but not quite. And then it couldn't hold all of those gains, so a little bit more sideways chop on the 2-year. 10-year pushing closer to those normalized conditions. And if this gets back up to that 5% area, that's going to be very bearish for equities in my opinion. Moving over to the dollar is doing exactly what we thought. So it took a little bit longer to follow through than I thought it was going to. I thought we would get the push right here, but then we ended up pulling back to trend support and then rallying higher. And now we're getting into those zones. The price target is still the trend line here at 106.4, and then you got 106.84 behind it. But another positive day. Seems like this is set to go higher. Even in overbought conditions, the dollar is looking very strong as a potential area for a safe haven during the geopolitical risk that's going on around the world. Moving over to JNK and TLT, both of these cratering on the day, 0.6 and 1.55. We hit the trend line, so we hit the price target. We'll see what happens. We're holding that level right now. It's up a little bit after hours. We're not quite oversold yet. Could absolutely grind along this for a little bit more, get a little bit lower, and then see a bit of a bounce. But right now, looks super bearish at a potential support. Similarly, J&K hitting that 144 EMA at 92.85. Did close above it by 3 pennies, but after hours we are below it. 92.50 is the actual support that I would be looking at, right at that 200 SMA as well. Moving over to volatility. Volatility went way higher across all markets. Bond volatility continues to skyrocket here. Actually was giving us a little bit of an indicator early there. And then looking at the VIX, got all the way up to a 19.2, closed pretty much on the high. At this point, it seems like we're probably going to overthrow that 20 level. Looks very strong, closing on the high, overbought conditions, momentum very strong. So 20.5, certainly within range. That would bring you right into the levels that we got to on the October low. Still some resistance in here, 20 to 20.3, but 22.5, critical level, very important throughout history. It seems like that's the zone we're getting into over the next couple of days. Moving over to my accounts, you can see I was down just short of 1%, not super great. My main account did really well. I was in a pretty strong defensive position there, but in my IRA, definitely took some hits on that IWM position, moving down over $2. And then I had the Qs position on that poor man's covered call, which I didn't roll down super great throughout the session. Either way, you can see I did clear my books. I no longer have any positions on with the structure breaking down. So we'll see if we get any structure, potential for getting into some smaller positions for some short-term plays. But right now, the short and the medium-term charts say that we are set to go lower, and there's no reason to play defense if it doesn't look good at all, which is what we're seeing right now in my opinion. Let me know down in the comments section what you thought of retail sales and the price action that we saw today. Where do you think markets are going to stop? I think it's pretty clear they're going to go lower, but where are we going to find some support? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.